Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. I hope you guys are all doing well. So we all know Jack Dorsey. He is the founder and CEO of both Twitter and Square. Took to Twitter the other day saying that hyperinflation is now here to stay, and this is only just the beginning, and things are only going to be getting worse. And we all know Cathie Wood, also known as Cathie Bay, or the mother of investing. A lot of retail investors look up to her and her philosophies on innovation technology. So we're going to be getting into what Cathie Bay replied to Jack Dorsey's tweet, as well as Elon also made a guest appearance replying to Cathie, as they're also friends. As we all know that Cathie invested in Tesla as of 5-6 years ago, before it became as big as it is today, and always believed in the vision, its autonomous driving networks, its AI platforms, its battery technology, its ability to take over market share, as we've been seeing today, especially today, or yesterday rather, when you're watching this video, as the price of Tesla is now above $1,000, which is super exciting. For any Tesla shareholders, congratulations. We're also going to be taking a look at the 10-year yield, the price of oil, the dollar index, and all those inflation measures. But yes, sir, we're going to get right into it. Before we do, if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, precious metals, inflation, and we're investing for the long term. As always, smash that like button and let's get started. Cathie Wood tells Jack Dorsey there are 3 reasons to expect deflation, days after the Twitter founder sounded alarm on rising prices. Cathie Wood took to Twitter to detail 3 deflationary forces that will overcome the supply chain-induced inflation. She said technological innovation, creative destruction, and cyclical factors will rein in inflation. Her tweet came in less than 72 hours after Jack Dorsey tweeted his thoughts. So on October 22nd, Twitter founder and CEO Jack Dorsey said hyperinflation is going to change everything. It's happening. The post went viral with over 73,000 likes and 25,000 retweets. Notable comments included MicroStrategy CEO Michael Saylor, who said Bitcoin is a solution to inflation. Of course, he would say that. And economist Peter Schiff, who slammed Bitcoin and touted gold. Of course, who would have thought that he would say that either? I mean, those are the 2 things those guys only say, really. So Wood, the founder and CEO of ARK Investment Management, rebutted Dorsey with a 12-part tweet, starting with a misconception she had in 2008 when the Federal Reserve started its quantitative easing following the global financial crisis. I thought that inflation would take off. I was wrong, she said. Instead, velocity, the rate at which money turns over per year, declined, taking away its inflationary sting. Velocity is still falling. And looking at Investopedia, which is one of the best references when it comes to investing and finances in general, I learned so much from Investopedia every single day, especially when I first started looking into the stock market and learning just about basic definitions. So what is the velocity of money? It is a measurement at the rate at which money is exchanged in an economy. It is a number of times that money moves from one entity to another. It also refers to how much a unit of currency is used in a given period of time. Simply put, it's the rate at which consumers and businesses in an economy collectively spend money. So going back to Cathie, she said there are 3 roots of deflation. The first being technologically enabled innovation, which will be the most potent source. So this includes artificial intelligence, an industry whose training costs have been dropping 40 to 70% at an annual rate, in which she called a record-breaking deflationary force. AI is likely to transform every sector, industry, and company over the next 5 to 10 years. And I know that I've been hearing, for example, truck drivers are going to become obsolete over time as self-driving will be much more efficient because robots don't sleep, and they're much better drivers than human, especially when it's back-tested over and over and over again. We can say without a doubt there's going to be so many less accidents on the road as a result in any other job, really, where you don't need a human physically there. For example, a robot can take over like a teacher, for example. But factory, instead of having workers, why don't you just have robotic arms and robots that can just do the job much more efficiently, and they cost so much less? That just changes the entire landscape of the entire economy. And think about 20 years ago when you thought of, the 2000s and what it brings, flying cars and robots and, Skynet and all these things. Like, this is the future now. This is happening a lot faster than we think. And it's amazing how fast these companies are innovating. So do not sleep on technology. Even think, for example, just another example, think of like a TV. My family bought a TV back in 2008. It was a Boxing Day sale, I remember, and it was a 52-inch LCD, and it cost about just under $2,000. Right now, if you were to buy the same, quality or level standard deviation of TV in today's standards, it would probably cost you like a quarter of the price or something like that, right? Just because that's how much technology has driven down the price. It's doing so exponentially. So the second root of deflation would be creative destruction due to disruptive innovation. So many companies, she said, have catered to the short-term oriented shareholders who mainly seek profit instead of investing in innovation. These companies will be forced to service their debts by selling increased obsolete goods at discounts. So think of your classic legacy companies that have stopped growing and are selling the same products over and over and over again. That just invites innovation to enter the door and kick them out. And because they haven't been spending any money toward growth or research and development, they're at a huge disadvantage because time is money when it comes to the stock market and business. And the more time your competitors have to gain an advantage over you is worse and worse for your own company. And they're going to have to sell it at a discount and lower the prices as the better products take over. And the last route of deflation in terms of Cathie Bay, this is the most controversial of the three, is cyclical factors. So after shutting down, many businesses are still catching up to the consumer demand that surged during the pandemic and are likely ordering double or triple what they typically need. But she predicted that wave will pass. Once the holiday season passes and companies face excess supplies, prices should unwind. Adding that some commodity prices such as lumber and iron ore have dropped about 50% so far this year. And that makes sense. And honestly, I remember Cathie's been saying this honestly since the beginning of the year. Like, she has been saying the same tune all year round. She hasn't changed her stance. She's been sticking to her word. I mean, maybe she has to because of the nature of what she's investing in, and she has no other choice but to sell her own fund. I mean, that's also a very real possibility, right? But, I mean, no one knows. But if you do have a fund manager, there has to be some kind of trust, or else you shouldn't have your money with them. She has her money where her mouth is, so it'll be interesting to see if she is indeed correct. It is transitory, and then we do see a bunch of huge deflation in the upcoming years, or if Jack Dorsey is right, we have hyperinflation, or maybe we just have high inflation, stagflation. It's yet to be seen. I am on the side of Cathie Wood. Maybe you can call me an optimist. Maybe I'm not being a realist. It depends on how you're looking at things, but I do believe that there is a lot of merit to what Cathie is saying, although we'll look at what Elon said in a moment, and he is very correct in saying what he said. So lastly, in this article, she also said that oil demand is below 2019 levels and rising prices should weaken it. Meanwhile, the ESG, which is economic, social governance trend, is forcing energy companies to shift investments toward renewables, and banks are lending less to that sector. Plus, electric vehicles are taking off, sowing the seeds of a serious oil price decline longer term. And I totally agree with that, especially with demand right now. Think of like flights and airplanes and stuff. We don't have that same demand, nothing close to what we had in 2019. Oil demand has just been going lower and lower. And we'll even look at the charts and look at oil making lower highs over the years. So look at what Elon said. So Elon is replying to Cathie, and Cathie was replying to Jack. So Elon Musk, I don't know about long term, but short term, we are seeing strong inflationary pressure, and he is hitting the nail right on the head. So yeah, Cathie, that's great. Longer term, we are going to see deflation. That's awesome. Woohoo, great. But right now, it really sucks. Paying for gas, paying for food. Right now, just everyone's kind of in the same boat. No one really knows what's going on. To reiterate, there's just so many different factors. You have a short supply of workers, products, semiconductors. It's just everything is kind of compounding on itself, and until that bottleneck gets through it, and that bottleneck will be painful, there should be brighter days on the other side. Hopefully, if there is hyperinflation, oh man, you got to prepare in so many different ways. That's a different topic on its own. Looking at the candlesticks ever since, let's say, mid to late August, we've been ripping up higher the price of oil per barrel. When we look at, let's say, the 4-hour time frame, we see it just respects that 20 and that 50 EMA so nicely, a very nice uptrend. Again, we don't know how high it's going to be going, where is that peak, but for the time being, it's just chugging up higher and higher until it tells us otherwise. And when we take a look at the monthly and we zoom out, and we can zoom out all the way to the great financial crisis back in 2008, see how high it was back then, and ever since then, we've just been making lower highs. So lower high in 2011, lower high in 2013, 2014, and coming over here. So we had a lower high in 2018, and we were expecting the same thing right now, but again, with all these inflationary pressures, it has been an exception, so we'll have to see how it continues moving forward. Usually gold and silver do pretty well during inflationary times, but we haven't really been seeing that this year. And we're still looking at the monthly, and ever since last year where we peaked, I think it was in August time, we've just been headed lower since then, around that 20 EMA on the monthly, so maybe we could find some buying pressure at this point. If not, the 50 EMA is around just under 1600. Interesting that gold hasn't been really reacting. And looking at silver, this one has, same thing kind of. It's been all over the place. There's nothing, it's a really hard one to trade. You can't really tell where it's going. So until we're over that $25 mark and then we're trading in a higher range again, it's just kind of, it's anyone's guess really where the next move is. And we can actually take a look at the daily as well. So it's kind of, again, all over the place. We want to get back into this $25 to like $28 range again, trade sideways in there. And we want to eventually break this 30 one day. I don't know when that's going to happen, but when it does, it will be a glorious day. That remains to be seen. Probably argue that crypto, Bitcoin, Ethereum are taking a lot of thunder from gold and silver when it comes to all this inflation, and people are just pouring their money into crypto. As what a crazy time it's been, just as a new asset class. It's crazy, honestly. It's never happened before, and it's super interesting. Whether you've been in the market for 25 years or you just started this year or last year as a result of the pandemic, like no one knows, no one's seen crypto before the way it's been exploding this year. So Totally interesting. And the last one I want to look at as well is the 10-year yield. Over the last couple of days, we have had weakness, so it'll be interesting to see if we get some pressure at this 20 EMA around, let's say, 155, 160. I don't expect this one to have that much more weakness. It could. Otherwise, I'm expecting sideways movement, maybe even upward movement toward 1.8 or up to 2. If we do go that high, I am expecting some kind of weakness in the NASDAQ, although I am bullish on the NASDAQ in the short term with earnings and seasonality. So it's just, again, a bunch of different factors that you got to take into account. And it can be overwhelming because you got to make a decision at the end of the day. And it's your damned if you do or you're damned if you don't. You got to, there's always a risk whether you buy, sell, or hold, or do nothing, or do everything. Whatever choice you make, there's always going to be consequences no matter what. There are so many variables when it comes to the economy, macroeconomics. No one for sure can tell you, hey, hyperinflation is going to happen at this point, at this day, or just like this. Or no way, this is just going to be transitory. We're going to be fine on this day, that day, and then we're going to be okay. No one has any idea, just like the stock market. No one has any idea how it's going to be playing out. There's so many different factors and variables that come into it. You have Powell right now saying that it's transitory. You have Jack Dorsey and a lot of other people saying hyperinflation. And then you have Cathie, amongst others, saying deflation is coming after all this craziness. So let me know in the comments below what you think of what's been going on, what's going to happen. As well as always, smash that like button, hit that subscribe button, and I will see you in the next video.